Hello traders, we're going to go through last week's trades. That'd be the week of September 20th to September 24th. It was at least a 12-hour week, actually quite a bit more potential out there because we had definitely some running trends that occurred on a few days which would have allowed for bigger profit. So the charts actually show more than a 17-hour profit. So we'll get to those in a bit. Let's just look at the overall volatility. As I said, EURUSD still in a very low volatility time. This is over the last year. We can see we were up around, above the 80 pip mark, 70 pips. Now we're down in around the 50 pips per day of average movement. So we're going to have a little bit fewer opportunities. And we can see this reflected in the overall stats when we look at monthly totals. Quite a bit of a drop-off in August as, the volatility here really started to come off what we'd been seeing pretty much through most of the year. So, fewer opportunities, but doesn't mean there's fewer, but it doesn't mean there's no opportunity, and there's still a good profit potential out there. These are just for interest's sake in terms of when the most volatility occurs per hour. This is why I like trading during the London USD overlap period, because this is this area here, and this is volatility by day of week. So you can go through all these stats, a 58% win rate, 2.3 to 1. This is a little bit deceiving because it could actually, if I made like 3.5 R on a trade this week, I just put in 2.5 for the stats. So what I put in for the stats is a little bit deceiving. You could have actually made much more. As you can see, the distribution here, rounded tops accounted for most, double pumps quite a bit as well, double pump variations. So week started off a little bit slow. We can see coming in when I start trading around 6:30. This is Mountain Time. This would be 8:30 a.m. Eastern Time. We'd only moved about 10 pips. Each one of these, between the lines is 5 pips. We're only moving about 10 pips. So very low movement. Not really interested in taking a ton of trades. By the time I took this trade, we're at 5:10, moving closer to 15 pips. And there was this little rounded top pattern right here, and I didn't love it, but maybe a little bit antsy to get in. And there was plenty of room to the downside here. If it had broken, it probably would have taken out most of these lows and reached that target just fine. So it wasn't a super bad trade. It probably just wasn't a great trade either, given the context. And I'd already skipped out on one here just because we were up near the high of the range, which I don't mind on a low volume day, and we started to see this bit of a rounded top pattern here. What I left out of this one is that it's all like pretty small waves. This didn't really slow down at all per se. We just kind of kept chopping higher. We had a bit of a shift lower here, but just really kind of just grindy movement. I wasn't just really into it, and like I said, we're just barely at that 15 pip mark. Ended up taking this one. There was a rounded bottom here. As you can see, just barely makes progress below that low. We have the pop-up, turn back to the upside. The reason I didn't take this one is in low movement days, we don't always get that range expansion. And this, when you're taking a trade up here and the target's outside kind of what we'd established throughout the day, sure, it may get up there, but it also could just keep grinding. So I don't usually take those, so I didn't consider that a mistake. If you did take it, hey, good on you. You probably made 2.5 R there. Next day, quite a bit more action. This was again, I started right around 6:30, 8:30 a.m. Eastern Time. You had this big double pump here, the drop, the drop, pop back up to the prior high, but we're about 2 minutes away from news, so you wouldn't have taken this one. If you did, your stop loss would have been up there. You probably would have been able just fine holding it for the 2.5, but we don't hold through news, so this was invalidated there. Then if you look at this overall structure, you have this ascent here followed by a big drop, which takes out all these lows. So it's a really big rounded top pattern. And so I wasn't willing to jump in just, as soon as I see a little spike. I wanted to see a little bit more confirmation. I like that we got this little false breakout here. If you've looked at the EURUSD day trading course, I like a little bit. Sometimes if you're waiting for a bit of extra confirmation, just because you see a pattern doesn't mean you need to just hammer it the second you see. You can wait for a bit of confirmation. There'll often be a alternative entry point. And we have this little pop above, which I liked, and then once I saw this red bar, I jumped in. Just missed my target, so I ended up losing on this one. A little bit of a heartbreaker. The 2.5 was right here, but I was going for a bigger target. I thought the price would probably try to retest the lows of the day, and it did, but it didn't do it on my time frame. It did it on its own, and it didn't come back till much later, almost probably half an hour, or even more than half an hour later. It didn't actually come back to test those lows. So actually it tested one of the lows here from earlier in the day, swing low. So yeah, it was about 20 minutes later. So that's the choice I made at the time. You could have taken no matter if you had your 2.5 out there, it reversed pretty quick, so you could have taken a partial profit, but there was no real reason to. We'd had this nice sharp sell-off, the little pop, even as it popped up here, that could easily just keep rolling over. So I'm not too eager on just jumping out of trades. And we talked last week and this week about times when it is good to jump out of trades, which we'll get to in a little bit. But this one, it was still, it dropped hard toward my target. It missed the 2.5 to 1, so I still would have been in it no matter what target I was going for. And I was, thinking if this rolled over again, it was probably taken out. It doesn't show on the chart, but there were some major swing lows from earlier in the session. And once the price gets close to those, it often takes them out. So I was looking for a target down here, a big one. I think it was like 3.5 to 1 or something. Got the bigger trade on the next one, the big double pump here. Kind of like what we had earlier in the session. We have the drop, the pop, the drop. We move up to this prior swing high. Again, we have this nice little false breakout above this consolidation. Lets us know that, the price tried to go higher, couldn't. Once we had this snap back to the downside, was in on the drop below that little false breakout. And again, going for a really big target. This one still ended up getting 3.3 to 1, but my target was actually way down here. It was like about 4.5. And so why did I get out of this one? Well, as I said before, I was looking for the price to reach these prior lows. I was already making more than 2.5 to 1, and it reached those lows, but didn't go through. So it did what I expected in that it reached the lows. It didn't do what I expected in that it broke through. So once it started to pop through, and again, in real time, you're watching this in real time. You can see the price. So watching this in real time, this hit it, didn't do anything, and then once it kind of moved up by a certain amount more than it had, so it had been moving up like, a pip, trying to drop to this level, moves up a pip. Tries to move down to this level, moves up a pip. Tries to move down to this level, moves up a pip. And then it moved up about 1.5 pips, and I was like, okay, that's enough. Let's get out. And because it did what I expected, and I was already in a nice profit. So no reason to hold that one. But if I had, still, it would have eventually hit my bigger target. So you just would have been in this trade much longer if you held it. But as I said, it did what I expected in the sense that it got to where I wanted it to, but then it didn't follow through. So no reason to hold on. Big rounded top here. This one, I misdrew this a little bit, and the entry I took is actually over here on this red bar. Because kind of like over here, I was waiting for a little bit more confirmation. This is a really big pattern, big green bar. So we had this, red bar, then we kind of had this little indecision bar here, and it wasn't until the price dropped below this one, actually, that I took the trade. So the entry point there is pretty close to accurate, but the entry point was on this bar, not this one. Either way, it just barely clipped out the target on that first drop, but again, if you held it, it would have eventually hit all the targets, and no stop loss in danger there. This one I did not include in the stats, and as you can see, I dropped this one for the stats in the article. I dropped this one to 2.5 instead of 3.3, and that's why I said the risk reward could actually be much higher, because I counted it as 2.5 and it actually was 3.3 in actual trading. But again, you don't have to expand targets, so I'll usually keep, even if I make more on a trade out for the stats, I'll put it at around 2.5. This one I didn't include in the stats because it was a little bit more an advanced trade. So let's go through this one. We have the drop, the pop, the drop, a pop. This is a way too big of a trigger bar to consider a trade on. Then we have this next pop up, but now we're kind of below these prior highs, and so it's not a classic DP in that sense. But then we have a little drop, we move back up, we make this little false breakout above this prior high. So we have a double pump type setup, and then we have that little bit of confirmation of the false breakout at the top. So that's why I took that one. And again, this one, the reason I wanted into this trade was because notice I was eyeballing these swing lows here from way earlier in the session and thought the price may drop below them, and it hadn't really taken them out yet. On this one it had tried, hadn't really dropped below, and I'm like, okay, we just had the false breakout to the upside. It's going to try to go lower again. Maybe this is the time it takes them all out. So it just missed this time I just kept it at 2.5 because if it takes out those lows, it might go a pip or two below, and that's a fine target. And just barely missed it. And then once it got back up above the prior lows, I just got out, because what I wanted that trade to do was to break those lows. It did. It just didn't have as much follow through as what my target was. And so I got out. So I didn't include this trade at all, even though I made some money on it, because this was a little bit more of an advanced trade, and then kind of controlling this one was also an advanced trade. So again, that point of, if the trade does what you expect it to do, but just doesn't have some follow through, then you're justified in getting out of that trade, as long as your rules that you've established for yourself allow for that. So more of an advanced trade. It also brings up the point of not just, people always want trade signals, just give me a very precise pattern to trade, and when it pops up, I'll trade it. And that may work, but it doesn't always work. You have to have a little bit of flexibility in being able to see slight variations in the pattern. What is the price action telling you? That's all a pattern is doing, is giving you a certain piece of price action. So it's important to understand what's going on behind the pattern, as opposed to just hammering patterns. So here, the price doesn't quite reach up there, but it's tried to go twice, and then we have this little false breakout. So overall, that's a pretty good indication that this is going to try to go lower. Another double pump variation over here on a big pattern, moves down, consolidates. Could have also taken an entry here or here on the consolidation breakout. Nice double pump variation there. So lots of potential if you trade it a little bit longer. No thanks. Came into this day. We can see we're well under 10 pips of movement in the last couple hours when I was trading. So just not a lot of action, and there weren't a lot of very super clean setups that I would have liked to trade, especially when we're only moving 10 pips. Bigger action day. This is a very flip-flop day. Strong acceleration here. I would not consider this a rounded top, because we're just seeing that acceleration moving through here. Then we transition into a rounded bottom. You can see this drop, pop, drop. This is the shift back to the upside. We've cleared a prior swing high. This puts you in bullish mode again. Pull back, shift to the upside, unfortunately this one stopped us out. But in that it did not move to the upside, we have a potential rounded top. You know, this high, the drop, this high, but we haven't made a lower swing low. It's only at this point here that we get the shift back to the downside, because we've pretty much matched this low again. And we have the little pop, nice little false breakout there, entry. Loss again. So, you know, I'm looking at 2 losses in a row. Then, what do we have to the upside? A rounded turn back to the upside. This time we have a broader context false breakout, in that, you know, we've been basically whipsawing back and forth here. We take out all those lows, but then the price instantly pops back up and consolidates. This is where I got out, because I'm like, if we pop back up, so for the stats I said this is a loss because the price just came up to here. I got a little bit early on this one because I saw the false breakout with the potential for it to move back up. Here, shift back to the upside. We've cleared above this prior swing high, the pullback, the shift up. This one does work out. I held it for a much bigger profit because I said, hell, like, we just tried to break out the bottom, we're probably going out the top of this thing. My original, the 2.5 was right around this high too, so it was almost hit, pulls back, and if the price starts moving up again, that's when you know you can also have a bigger target too, because the price is probably not going to stall out right at this prior swing high. It's probably going to try to, if it takes out this one, it's probably going to take out all these. So it held this one for a bigger gain. And then a double pump variation. The double pump was really ugly. No real chance to get in. These are all really big trigger bars, pop, drop, pop. So, you know, nothing on the actual double pump, and we want clear waves on the double pump. So we have a double pump like pattern again. Price moves up, consolidates, breaks out. Here we have the little break. It could have also taken this one here, which was maybe a little more classic as it moves up toward the top of the pattern and then breaks out. Either way, easy 2.5 to 1 there. Let's go to our final day, Friday. Really big profit potential here again. Rounded top. This is more like the classic where, you know, you just have this, you know, price just really struggling to move up. We have a shift down, kind of takes out some of these lows, pops up, and drops. Easy 2.5 to 1 there. I was viewing this as a little bit of a rounded top. I didn't love it because it was so tiny. But, you know, we have the drop there, the move back up, and then we have this kind of fall back to the lows, takes them out, a little bit of a pop up. And the drop didn't go anywhere, so a quick loss there. But we did have a bigger double pump play. We noticed the overall context. Really strong selling momentum, the drop, pop, drop, right back up to the high. Another false breakout again. Very nice to see. And an easy 2.5 to 1 there as well. I've also noticed this pattern tends to play out. Notice how, you know, we'd had the bottom in place here, and then when the price breaks below it, we have the drop, and then it tries to come back up and test it a few times. It did it over here too, where you have, you know, the price kind of chopping around in this area. It breaks below it, it comes back up to test it, drops below it, it comes back to test it a couple times. It came back to test it here, and then it comes back to test it here, this little support area here. And then you have this support area here where the price comes back to test it a couple times. Doesn't always happen, but you're waiting for that price action to confirm it. So it came up, dropped, so we have a double pump, and then we also have this little false breakout, plus it's coming back up to test this area and getting rejected. We're not entering on this green bar, we're only entering once the price starts to fall back down. Pretty classic rounded bottom here. This was a little bit of an acceleration here, but if you look at this drop, you know, this is a pretty big drop, just straight red bars, the push up, and then it's only a couple little red bars. So in my opinion, even though this was, you know, still a decent sized drop, it's not quite the slowing that we saw here. This is, for this wave, a slowing, because it started out really fast, popped up, and then this one has a lot less momentum than this one did. So that is a slowing, the push back up, and then we have this beautiful little stall out here, entry on this green bar after this. We had a green bar, then the pullback, and then entry on that little peak there on that green bar as it got above the prior highs. And held this one as well, because I figured it's going to probably try to retest this area here. So that's right around where my target was placed. Could have also used a aggressive trailing stop loss above the 2.5, and just because as each bar moved up, moved the stop loss below it. So that is the week in review. In terms of what I'm focusing on for next week, I didn't do super well with implementing my pre-trade routine last week. I just kind of, a few days I just sat down at the computer and jumped into it. And like I've said in the last week's video, I think, you can still trade well without the pre-trade routine. But what happens is, as you get out of all those good habits, your trading generally starts to just kind of dive off a little bit, almost like you don't even notice it at first, and then after a couple weeks you're like miles away from where you were, and I want to prevent that as much as possible. So just when you notice you're slipping out of your good habits, just kind of ease yourself back into them so that you stay trading well, or give yourself the best chance at trading well. So I just noticed that, and I wanted to get back into that routine. And then also something I always push and just make sure I'm doing, and I'm doing it pretty well right now, but just that constant reminder of commentating the price action. It's very hard, if you're not commentating the price action, to react when you have these sharp shifts in the trend. You go from rounded bottom to rounded top to rounded top in like quick succession. If you're not commentating the price action and saying, okay, we just had a drop, a pop, okay, this one went a little bit lower, okay, there's a shift back to the upside, we've had the shift back to the upside, do we have a rounded bottom? Okay, where's my entry point? We're dropping, if the price moves above this, we do have a rounded bottom, I'm going to take that trade. By talking yourself through the price action in that way, you're ready for the trades that come, for shifts in the market. But if you're just sitting here twiddling your thumbs, you're not going to catch those shifts. You're not going to be ready for the patterns as they occur, especially when they occur very quickly, or the price action gets a little quicker, a little bit confusing, like it can at sometimes. You have to be talking yourself through it. Doesn't matter if you talk out loud, but you have to be talking through the price action in your head. It's also going to keep you very engaged in what you're doing. It's going to help with holding to your profit targets, because you'll have already, before you even took the trade, been talking to yourself and saying, okay, where could the price go? Where are the swing highs? Where are the swing lows? Do I want to keep my 2.5 to 1? How am I going to manage this trade? It helps plan it all out, so that once that trade comes, or if it triggers, you're just ready to go. So that is the week in review for this week. Until next time, happy trading.